So let's dissect the global and the domestic picture with the help of a market veteran, David Bizarkar, Head of Equities with Daiwa UNC, joins us. David, good morning. Thank you for joining us. David, at the current juncture, do you think Indian markets are going nowhere because local news flow has dried up and globally things are looking slightly shaky?
Good morning, Nikunj. At the current juncture, as far as the Indian markets are concerned, I think the uppermost thing on most investors' minds is what happens in this upcoming parliament session. So the next 20 days or so are going to be quite interesting. I think the initial couple of days there would be a lot of protests, etc. But I think the underlying business should start to get going in the next 3 or 4 working days. So I think investors in India are going to be focused on what happens here, because this is a crucial session. And if you ask my view, I think I would be cautiously optimistic. I think we will see some amount of positive business getting transacted. So overall, I think the markets are waiting for the next trigger, and that could be provided by some positive news coming out of Parliament. Also, the National Investment Board is likely to be constituted in the next fortnight or so, and I think that is also a game-changing kind of development, because apparently there are some projects worth 2.5 lakh crores which this National Investment Board can actually ensure that there is a speedy implementation there, and that is roughly 2.5% of our GDP. So these two developments, I think, will be the moving factors for our markets going ahead.
David, you know, I've always maintained that prepare yourself for some kind of an eventuality. So what if the winter session ends up becoming more like a monsoon session where we see no work on the floor of Parliament? What to your mind will happen to markets then?
Well, I think the markets are at least pricing in some sort of positive developments being seen in this particular session. So if this session is also a sort of a washout, then the market will obviously react negatively. And like you earlier said, we are not seeing support from global events as well. Also, the last earnings session has been...
If the winter session is a washout, do you think Nifty will go below 5,000?
I'm not sure about precise levels, but we could see a erosion of the September gains. That is quite possible, yes, because the markets are already building in some sort of positive momentum on the reforms front. Yes, there has been a mild correction over the past month or so, and also the rupee has retraced virtually all of its gains. But still, I think if you look at how the markets are trading in terms of the valuations and the current earnings expectations, then there is some hope already built in. And if that hope is belied, then of course the market is likely to react negatively. But if you ask my view, I think I would be optimistic. I would be hoping that we would see a positive outcome from the Parliament in this particular session.
David, how are you reading into the news on pharma pricing this morning? We chatted with the management of Lupin as well, and they seem pretty unhappy about it.
Well, actually, I haven't seen the precise details, but I think what has happened is that there will be a adverse pricing pressure, more than what market participants were expecting. But I think one needs to understand the exact details of the policy to understand how it's going to impact individual companies. But overall, for the pharma sector, although this is a short-term negative, I think any weakness on this count should be used to add on to positions. We are positive on the pharma space because the rupee has again depreciated, and the generic opportunity across the world remains quite strong. So I think we would utilize any kind of weakness in the pharma space because of this policy measure to add on to our positions.
Do you think pharma stocks may not correct at all? Because The general consensus on the street was that a price control was coming. In fact, what we understand that the price control may be in a different form. It may not be a cost plus price model. It may be a market driven price model, which actually is not a great news, but it is certainly better than a cost plus price control.
Yes, I think it is some sort of a middle of the road kind of an approach, but I think we would need to exactly understand the exact contours. It is difficult to comment precisely without seeing the exact details. So it could be a middle of the road policy, and the market might might not take it as negatively as was perceived yesterday evening. So there is some sort of a dilemma there. Of course, for companies totally dependent on the Indian market, I think it is an incremental negative. But for Indian companies who have almost 50% of their business coming from overseas, they have a sort of a hedge there.
Which is one group or one cluster where, to your mind, last 12 months have been challenging and volatile, but next 6 months or next 12 months could be rewarding?
Well, if you look at the relative outperformers, underperformers, then you have the industrial sector, also materials, energy, utilities, which have underperformed, and things have been quite challenging for these sectors. Going ahead, it is difficult to see how the macro scenario for materials will improve. There is a possibility that with the setting up of the National Investment Board, that the scenario for industrials and utilities might improve. But as of now, I think it would be better to remain cautious and wait for these things to actually happen on the ground before taking a stance there. Better way to play industrial revival, I think, would be through public sector banks.
David, I just want to revisit pharma once again, because that will be a talking point. I may sound slightly repetitive with this, with this one. In the near term, do you think MNC pharma companies are an absolute no-no?
Well, if you look at the MNC pharma companies, their growth has been sluggish. Valuations are on the higher side, and management interaction as far as investors are concerned is quite patchy. So generally investors tend to avoid. Stocks are also illiquid except for a couple of names. So yes, companies are well managed with high ROEs. There is some sort of predictability, but there is not too much excitement there. Maybe one can use them as a defensive bet.
David, what is your sense when it comes to the PSU banking stocks? Do you think it's time to now cherry pick and start nibbling in at lower levels, or do you think the NPA overhang is here to stay and the market would throw out better opportunities to get into these names?
Well, Aisha, to be on the safer side, I would wait for another quarter or so. I would also like to see what is happening on the National Investment Board front. I would want to see some indications of industrial revival, capex cycle revival, etc. But then, if you are brave enough and do not want to lose off on the initial 10-15% kind of move, then I think maybe selectively for the larger sized banks one can start nibbling in now. But if you ask me, I would prefer to be on the safer side and wait for more on the ground indications to get more positive on the public sector bank space, because there is a possibility that the large amount of restructuring that these banks have seen over the course of the past few quarters, the amount of delinquencies will start rising. And also, if you look at the last quarter or so, in the initial easing cycle, PSU banks tend to suffer as far as their NIMs are concerned. So unless we see a large bond rally which can offset this NIM contraction, we will not see a sharp uptick in profit. So there might be trading rallies, but if whether or not there is a sustainable up move at this stage, I would still be cautious.
David, one final word on the divestment drive, which now the government seems to be in an overdrive mode with a lot of names being talked about, Hindustan Copper, NMDC, NTPC, as well as Oil India. Anything in particular that you would watch out for?
Well, these are the familiar names. Although I think, as far as an investor is concerned, I think it is better for these issues to sort of pass through. After that, we will see improved liquidity in the stock. But none of the names, as of now, seems to excite. Although a couple of them are of course quite cheap in terms of valuations. But I think investors should wait for the listing to happen, for the stock overhang to pass, and then look at these stocks. That would be a more prudent strategy.